Hi guys, welcome to this week's weekly video. I hope you guys are enjoying your weekend and you had a good start to 2023. I hope everybody ended their week in green and you are following through all your plans that you wrote down. So let's have a great year. We're going to be going into the second week of 2023. We had a lot of data came out last week, and we have a lot more coming out this week. Thursday and Friday is going to be pretty interesting. On Thursday, we do have Powell talking, and we do have CPI data coming as well. So this is going to be, again, one of the volatile week as well. So be careful. Don't oversize. Just make sure keep your losses small. Keep everything you should trade with stop loss. Don't trade anything without that. Again, also wanted to put this out there. This is not a financial advice. I am just sharing what I'm seeing on the charts. So I appreciate you guys' support by liking and following these videos and watching every week. So thank you. We'll go over some charts and see what I am seeing and some of the other sectors that seen some changes on the weekly charts as well. So we'll review that. All right. So let's get right into and see what's happening. All right. Okay, so as we saw, the numbers came out on Thursday. The ADP initial job continues. All these numbers came out looking pretty good, which isn't good for Feds. That's not what Fed's motive is, to bring the inflation down or not having to increase the interest rates. So having these numbers come out good that means Feds have a lot of work to do still. So keep that in mind. We'll go over the charts and see how these numbers actually translated and how the market ended up moving. But again, you would think, oh, it's a good numbers. Why would that not be a good? Because to bring inflation down, Feds need to make sure that people don't have enough money to spend. But if the job market is strong, that means people have enough money to spend, and they are going to continue to raise interest rates. So, and that's what's happening right now. And I feel like if you go back and you read some of the books or you watch some of these documentaries, it feels like to me that Feds are trying really hard not to be the 1970 Fed. They are trying this to be the very much of that beginning of 1920 to 1930. And then what did follow up after that? It was a Great Depression. So we really need to see Feds to, step up and have this under control. Otherwise, I think we're going to have some of the worst crashes that we haven't seen. So again, I hope I'm wrong, but we'll see what market brings. All right. So next week we have nothing actually on Wednesday. Speaks in Sweden on Tuesday, so keep this in mind, 9 a.m. And then these are the 2 days that you want to pay attention, is the Thursday and Friday. Thursday, we have core CPI numbers coming up and initial jobless claims, and we have Powell talks that day as well. So this is going to be where we're going to see a lot of ups and downs. If CPI comes, as you can see, we had CPI been coming lower, at least by a point over the last a few readings now. So I won't be surprised if it does come lower than expected. I think we're probably going to see a couple more, probably lower than expected, and then boom, it's going to back up, and then we'll see what's going to happen. But this is what you want to pay attention to. It is on Thursday and Friday what's happening. Don't just think that if CPI comes good and market is running and we are out of out of the bear market and we are bullish. No, there are key levels on the chart that we still need to clear, and I'll show you guys what I am seeing and what are the things that we definitely need to pass through before we can say, okay, market has turned around. All right, so let's look at SPX. This broadening wedge pattern that I have, we've had a really nice rejections right there. So now we are on, this is actually the weekly chart. So we'll see if we are able to, we're right kind of in between the 10 moving average right here. So want to see what kind of a move do we get above the 3,900 right here. So let's go down to the daily chart. So if you are one of those people who like to play SPX, this is actually I've added the 50 moving average as well. We're right at the 50 moving average. We did on with that Friday's run up, we did touch above the 3,900, but still we need to clear out of this trend line. So once we start to clear up, then we have a little bit more room to the upside. But what I'm thinking is, or I'm seeing is actually when we go to the futures chart right here, I just have a different chart for that one. This is our daily volume imbalance, which we actually closed it below. Would have loved it if the candle had closed between above it at least, or in between. That would have considered that we have closed it. Right now we have also a weekly imbalance as well. So if we go to the weekly candle right here, so this is our weekly imbalance. So what I'm thinking is probably today's open, we might gap down. So I'm talking about Sunday, recording the video on Sunday. So on Sunday, if we gap down, we will probably come down to this area, 38.78 to 38.95. What happens is, if you go back to the previous videos on last weekend that we went over, and I talked about this imbalance. Anytime there is a volume imbalance on the daily or in the weekly, market will tend to gravitate toward those levels first. So whether it does it the next day, whether it takes few days, but we always will see that market will come try to gravitate toward those levels and try to fill that. So keep that in mind. I would definitely put these on your chart, 38.95 to 38.75. Sorry, 78. So this is your imbalance, and that's on the weekly. So if we do come back and fill this and then come back, then try to turn around from here, then we do have this fair value gap to fill as well. So we'll probably be looking at 39.60 next and 39.80 on the future side of it. And then if I were to switch back to SPX, I am then also looking at the 4,000 key level for SPX as well, 4,000 to 4,020. What does this mean for SPY? And for SPY, it means we need the 398 or the 402 level to be breaking and held. Because if you look at this trend line and your 200 moving average, we do break out of it, but it's been so far a fake breakout where it has hard time continuing to the upside of it. We always end up coming back down. So for us to see, market needs to first get above, because if you look at the last week, 379, this line right here has been a strong support. Market bounced multiple times. So for us to now say that if we are going to be breaking down, we need now 377 as our confirmation that it's going to continue to break below and take out these new lows out of it. However, if we are moving up and we're continuing to go up, first level that you want to watch is 392, and then you want to see 398 and then 402. If we get out of those two levels and we continue to move higher, then 416, 420 is on the table. The other thing I was watching is, sorry, I haven't updated this one, but I'm going to just hide all the drawings on it. And you see on this chart where we are. So either we are getting this, at the end of September a fake out rally, and then we ended up dropping and making this new. Either we're going to be starting this, or we are going to be getting into this straight up rally. So this is the straight up rally would start for January, that we had it in October, or we're having this small fake out September rally that we thought we are out of it, and then we had this nice pullback into the making new lows. So that's what I am thinking, that we will probably either we are having that September fake out, or we're starting that October rally back up again. Play price action. I had somebody ask me a question: what is the best indicator to use? Let me say one thing: price action is key. If you can't read and if you can't understand price action, these indicators mean nothing. Indicators are working with the price, right? So there is a lag on the indicator. The one thing you want to pay attention and one thing you want to spend time is understanding the price action. Be able to read the price action. Spend time learning on your candles. Don't chase the indicators. You can have as many indicators on you want. If you don't know how to read price action, those mean nothing. Trust me, I try them out. I test them out. I've worked with or tested multiple indicators. Do they help? Yes, they are confirmations for me, but my first and foremost is my price action. That's what I am paying attention to it. And a lot of the times, most of the information is on just look to the left on your chart. That's all you need to do. If you look to the left of it, it always tells you a story, and it does end up repeating that story a lot of the time in the future as well. So pay attention to that. So that's what I am looking for. SPY 398 and then 402. Let it break, let it hold. If we can have a bullish proper candles, it is gonna be then we can say, okay, we are running to the upside of it. All right. So that's what we have on here. The other thing is you want to pay attention to is dollar, because dollar looks like is doing a back test. And if this is a back test and SPY runs and then SPY exhausts at 398, you're going to see your dollar take off. So if I go to the 1 hour chart here, this does look like was a beautiful back test on Friday of dollar breaking down and your market running up. So anytime you feel like, oh, market is running and you are trying to chase, the first thing you want to do is you want to come check where dollar is, or you want to check your VIX and UVXY. All these three things you can check before making your decisions, whether you are going long in your swings or, short on your swings, whatever you're deciding on it. Do check those three things and work your way down from weekly, daily, 4 hour to 1 hour chart. And if you have three time frames lining up with your analysis, whether it's a call or a put, minimum three at least you should have before jumping into any of the swings or any of the trades, whether you're buying shares or whether you're buying calls or puts, whatever the case is. All right, let's go down and check VIX as well. All right, I think the 4 hour is looking like we might be getting a nice diamond on the 4 hour. Let me just okay. So if you were to draw on the 4 hour, you could draw from this top right here, and then you would bring it right down here, and then you bring it back up and right there. So I can actually draw. Going to be a little bit of an ugly diamond, but it looks like we are trying to make one on the way. This is the 4-hour chart, so we definitely want to, I could actually even move this up here and bring this right here as well. There. It's a little bit of a ugly kind of diamond, but it's making some sort of a diamond on the VIX as well. So if we are bouncing from this trend line right here, that means it lines up with the with our futures gapping down today, and then having to move higher overnight. But what we want to see on the VIX is these are the key levels that it needs to break. I've talked about this during the live as well. 2347 and 2478. Until we break and hold above, we are going to continue to stay in this chart. So those are the things you definitely want to pay attention to it. All right, so let's look at some of the charts. I had a request for Exxon Mobile. Okay, here we go. We are on the daily. So what I am seeing on this one is we have a hammer or a shooter looking candle on the day, and it did reject right here at the 112 level. Right. Sorry, I pulled up the data on it where the let's see if we can find it. I'm on the right chart, but I had pulled up the information on the dark blueprints and posted on the chart right here, and looks like it is on. Okay, let me quickly find where the information is. Okay. So looking at this, and as looking at the dark blueprints as well, I'm gonna have to find now the dark blueprints. Actually, I have. Okay. So this is Trinity Picks, and this is the dark blueprint right now. So unless you have your XCOM is breaking above, I would say even give yourself $1 or $2, $112 or $111 breaking above, then we can say it has a room to continue it. However, any of these levels broken below, and look at the amount it has right here, 110.30, 213 million. We start breaking below this, it has a room to come down to 104 area. So, and you have quite a bit of open interest on, 102, 106, and 98. All of these levels have, $100 strike price, have quite a bit of open interest on the put side of it. And again, this candle is, you could call it hammer. You could also call it, I would call it the candle. However, we are above the 50. We are above the 10 moving average as well. But this rejection is beautiful. Would have loved it if I had retested this supply up here. But if we are, let's say market is trying to bounce, especially on Thursday, we could see a lot of the things come up to supply and reject it. So anything above 112 has a room up to 114. However, if we break below this 110 level that I showed you guys on the dark pool prints, I would wait for a confirmation of breaking below the 50 or the 10. You do have a room down to this zone up here first. And if we take out this low, which is at 102, then you're probably headed down to this demand zone as well. And this is with our new setup that I showed you guys last week. This also has a nice trend line on the daily. Even on the weekly, it has a nice trend line that it got rejected at. So I am definitely a little bit more bearish than bullish on it, to be honest. And this is your 1 hour chart. And on Monday, I would watch to see how we react on Monday. Do we continue and retest these trend lines? And watch the 1 hour. If it is starting to break below, this could be a nice day trade up to your 200 moving average. So definitely something to watch on XCOM. On how do you pronounce it? All right. The other ones that are looking really good is semiconductor. This is your ON. These candles are called 3-in-1 inside combo. So we did not break above the 200 moving average and literally closed between these 3 candles up here as well. So if this semiconductor is breaking above the 200 moving average, your first target is right here, the $64. We break this. We do have this zone right up here. It's already been tested, but again, sometimes these zones can act as a strong support and resistance. So we would be looking at $66, $67. However, if we break below right here, 59.89, I would give myself a little bit more room. I would give it up to 58, to be honest, even dollar. You do have a room down to come and retest this low in the 55 and 44 area as well. And this is your weekly, and weekly also looks like really nice hammer as well. If you were watching it. However, for this one, I want to see how it reacts to the 10 moving average up here. Or if we close below 50, then again, we are testing this 55 area on the weekly as well. So those are the levels for ON semiconductor. And then the next one is I want you guys to watch is Web Shop. I don't know if I pronounce it right. Again, we got the inside candle on this one as well, and it's been on a run for a while now. Look at that beautifully, how it's held the 10 moving average. And your RSI is pretty oversold as well. However, this can stay oversold because if we look at it, it's been oversold pretty much the November and the December month. However, I wouldn't say get right into the puts. But if it comes back down to the 10 moving average and bounces from here, it could go back and retest the $16 level again. So again, I would definitely watch how it reacts from here because every time we've come down to the 10, we've bounced it from it. So it's better to wait because it does have a gap to the below before you jump right into calls. I want to see if it wants to come down and close these gaps because we got a gap right here. And we got a gap right here. It has quite a bit of gaps. So definitely you got a gap down there. We have a small gap right here as well. So pay attention to once this thing starts breaking down, could have more room to the continue to the downside of it. But the weekly candle is beautiful engulfing candle above the 200 moving average. That's why I'm saying this might be set up for a good if it moves down to the 10 moving average and bounce from it would look really good to go above go higher than. Okay, so that's what you want to watch. All right, let's look at some of the other stuff. Apple, beautiful engulfing, bullish engulfing candle above the 10 moving average. The one thing I definitely like is the weekly candle. Look at these weekly hammer candle on it. That is a beautiful hammer candle, if Apple crosses above 132, we will continue to have a little bit more room to go higher. However, still, I would say I still have my zones to the downside as well. The reason I am saying this is if market wants to do that October run up that we had, like this run up there, then I am thinking that Apple could have a room to go back to the 145 area before we move new lows on it. However, if it does break below, then you have your levels to the downside. Another one with hammer, and I'm on the weekly chart, remember this. Look at this beautiful bounce on Airbnb, and you got a hammer candle on this one. Tesla, believe it or not. We actually have a nice hammer candle on Tesla and right in the demand zone as well. This was a perfect case of liquidity grab that it came down and bounced it very nicely. So again, you want to play your levels. Don't just because, we have a one green day that we're going to continue. On the daily, it definitely needs to break above the 10 moving average before we can say we have a little bit more room to the upside on Tesla. Okay, another one. So this is the one that we want to look at, is the biotech. Okay, so this is the weekly. We do have a hammer candle on the weekly. We are at the trend line. Again, remember I talked about the biotech sector in my previous video because they rely heavily on funding, right? That's the only way for them to do their researches and be able to do better. And these charts will tell you the story of it when market is about to pull back or about to go up. So if you haven't, go watch that video as well. But this one is right at the trend line. And every time we've had a break out of it, we break back into it. And this is the weekly, okay? So what I want to see on this one is break above the 85, 81, then it has a room to the upside. So if we go down to the daily as well, we're sitting beautifully on that trend line and want to see if we can break. Otherwise, we have a room. We're going to continue to come down. That's your SB, right? ARKK. Numbers there. Actually, nice hammer candle for them as well on the daily. So 2 candles. If ARKK can get above the 10 moving average, could have a little bit more room to the upside on it. All right. What else? Get NVIDIA. It looks like we have an inside candle on NVIDIA as well, right here. We need to break above 150 zone and see if we can get above the 50 moving average. That's on NVIDIA. Oh, the other one is Nike. We actually had a bot call out Nike for a put. We are right into the demand in a supply. So this was actually a nice retest back to this zone of 125 and got rejected at 125 and closed below. I'm definitely more bearish. It does have a hard time breaking above higher of this RSI as well. So we want to see if we have the pullback on this one. Otherwise, my stop loss will be above the 130 area. So if it does wants to move higher. But this 125 is a key level to see if we are going to cross it and how are we going to cross it. And this is the beautiful, actually, 5-day supply that we are here. If you want to go down to your 5 days, and you can see in a beautiful 5-day supply. So, definitely watch the 125. Okay, last week we also talked about Lily. So this was actually nice. It gives you the entry even on Monday. it had the retest of this area again, and then we just dropped, and that was really nice and took out this liquidity from here and bounced on Friday. You still want to watch and see if it can clear the 360. If not, probably more room to the downside. It's still on it. And the other one is Mark. It's still going. So Mark had another retest of this supply zone. Again, once this one starts to break down, it is going to have a nice break below to the 107, 100 area even. So it's still very strong. So if you are, please make sure that you are not getting anything under 6 months to a year on your contracts on this one. Because these bearish divergence got canceled and it moved higher. Not everything always works out. Just remember that. Okay, let's go to Google. I think that one also had a hammer or shoot. Yeah, look at that beautiful hammer candle on Google as well. And you know what? You can do all these scans within TradingView. You can put what kind of candle you're looking for, or you know, are you looking for something closed above 200 or above 10? That's how basically I find. I just run a couple scans on based on the candles, and I like hammer shooter candles or inside candles. So those are the ones I usually do my scan with, and that's how I find it. You can for Google, if we close above the 10 moving average, we definitely have a room back up to the 91 and 92.80. Okay, so that is it for me. I hope you guys enjoyed today's video, and please don't forget to like and subscribe. Thank you so much for all your support, and I will see you guys next week. Thank you.